dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk, why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, and we're back with Chris Pulver. Hey Chris, how's it going, man?
Happy Monday, Nick. What's up, man?
Good to have you back. And sorry, last time we had our power outage issues in the building, but we are, I believe we're back and running good. So shouldn't happen again. Let's hope not, at least. Chris, I want to ask you about the yen. You've been talking about this 152 level.
Yep.
We're nicely above it now. Are we on track to see the dollar yen just do what you're talking about, just a run to the upside for some time?
I think the melt up continues. I think the carry trade is still pretty alive and well. I mean, if it's not when we're looking at some risk off tones to the stock market right now, gold's taking a retreat, silver's taking a retreat, oil's down. The yen's not moving, right? Swiss isn't really come back in a huge way. I mean, the dollar's been drifting higher. So to me, this is probably just the easiest carry trade for the market to play. And at the same time, it's also the better barometer for the unraveling of the carry trade. Because if you look at yens across the board, I mean, the dollar yen is the one that is up, 250 to 300 pips on a breakout. We're up to nearly 155, and 152 is that resistance. So that's a 300 pip breakout. If you go to, Aussie yen, we had that big spike last week that's right off the dip, but are we at all-time highs in the Aussie? Not even close. CAD yen, not even close. Swiss yen, we were down to 167, came up to 169, not close to all-time highs. So I think the dollar yen is the easy carry trade right now. And I've got robots participating. I didn't take just the straight up breakout at 152, probably like I should have, but I think I make a lot more money by just not trading the yens and leave it to my robots, because the logic is solid. It trades what trades what it sees. And sometimes I tend to get in the way where it's like, we're overbought and we're oversold. And I like to trade some of those, divergence levels and anticipate when to trade. And the yen is not that currency. The yen is not about anticipating. Just trade what you see, and the yen will reward you
for sure
a lot better.
For sure. Yeah. And I think when it comes to
okay,
all good.
Yeah,
I think when it comes to the currency world, it's always interesting because currencies have a bit of a different dynamic than straight up commodities or indices, etc. And currencies have no real long term, for the most part, directional bias. So if you're somebody who's trading the euro and you've got it trading on a robot, I think that there's some wonderful, kind of longer term mean reversion stuff that you can do as long as you manage your risk, etc. That being said, though, right now the dollar to me just looks strong. There's just so many reasons for me to be bullish on the dollar over its counterparts. Whether you're pointing towards geopolitical risks in the world, the dollar's kind of a safe haven in that regards. Or if you're just doing good old fashioned central bank divergence, I think you're seeing the ECB look like they're going to cut rates. Meanwhile, the Fed's now talking about, not talking about, but the market is expecting the Fed to perhaps drop down to just 2 or even 1 or maybe 0 rate cuts this year. Of course, that's up for debate. The point, though, is, if you are super convinced one way or the other, here's the issue. People were convinced of 7 at the start of the year. Now we're talking about possibly getting 0. I mean, it's all over the place. And that's why markets are volatile, is because the Fed doesn't know the future, just like none of us do. And so, if you're looking at the dollar, I think for me, the story is, clearly the central banks in Europe are looking to cut rates. So is the Fed, but they don't have the good enough reason. Will that though be, Chris? Is that going to be PCE this week? PCE on Friday is the Fed's. They've said their preferred measurement of inflation. What
Mhm.
happens if you get a cool PCE number on Friday?
I mean, I think that that'll be good news for the market to kind of take away the pressure that we saw from the CPI data last week. We had PPI and CPI put on pressure where it's sticky again, and I mean, it did shift the expectations a lot. I mean, like you just said, market, and this is what we have to remember too. The market's always forward thinking. So in that like 6 to 8 month window last year in October, when the market was anticipating like, well, hey, inflation's getting way better, so let's start ripping on. It's in a combination of Q4 and Santa Rally and Animal Spirits. And then the Fed was just crazy dovish in December, which is exactly what the market wanted to hear to keep ripping. But we come into this year with seven expected cuts that quickly turned to like three. And the Fed was very consistent with that until last week, the last
Yeah,
couple weeks.
yeah,
And what's, we look at the May 1st, it's like May 1st is another Fed meeting. It's expected to be a pause. June was supposed to be the first cut. If the Fed does nothing in June, I don't know why in September they would make a cut 1 or 2 months out from the election.
yeah,
By the time we roll into like September, October, it's going to be all about the election. I think what the markets need to kind of just get through this month in the next couple of months as we head into summer is just digest this geopolitical stuff without doing too much damage to the bull market that's been created the last 3, 4, 5 months.
yeah,
So yeah, I mean PCE, I mean it's monthly PCE, so I think it comes in as expected. I think the one thing that maybe overshadows it for this particular week is Mag 7 earnings. We
yeah.
have if
I
yeah
agree.
we have so on let's talk Mag 7. So Tesla was kind of kicked out of Mag 7, but it's still volatile. So I'm going to take a look at Tesla for a trade on Tuesday. Meta is on Wednesday after market. We've got Google and Microsoft after market on Thursday. We have some energy plays on Friday. 554 companies in total this week. So it's a huge earnings week.
Yeah,
And I think this is enough to also stop the bleeding because we have big enough market cap companies that if they're not missing expectations, I mean, Netflix got hammered last week, even though they beat top and bottom, but they said something kind of silly like, hey, we don't want to report subscribers anymore. It's
yep,
like,
yep,
why would they do that? That's been one of their biggest reasons for growing.
yeah,
And the
yeah,
market gets excited. So all of a sudden they take that away. And maybe that's just a sign of like, well, at some point we're going to lose subscribers and they don't want to be punished for that. But I think it's
yep.
still silly to have the stock drop the way it did. But a lot of volatility and big market cap companies to kick off this week's earnings.
Yeah, no, that's a huge point, Chris. And I led the show with that too. I was pointing out that, for the first glance, FX and futures traders, you might not think this is a big week. But if you understand, the earnings cycle, it is a massive, massive week. And there's also something in there, Chris, for the currency traders out there. Visa earnings, because Visa earnings are super big because it is almost like retail sales 2.0. You're getting some really good insights in that earnings report about the consumer. What are credit card delinquencies looking like? What is spending looking like? And if that's still strong, that's another reason for the market to potentially catch a little bit of a bounce. But also, if it's too hot, it's similar to retail sales. If retail sales are pretty good, then the market loves it because it's like, oh, stocks are going to do great. But if it's too hot, it's going to say inflation's not going anywhere
Right.
and we're going to see higher for longer. So that will be an interesting metric to look out for. I believe that is Tuesday after the bell, right around when Tesla earnings come out. Chris, I want to badly talk to you about Tesla, but I'm going to hold off for a second because I want to get some more stuff out of the way here. First,
Okay.
let's talk indices. S&P 500 had, of course, from peak to trough, I think we've seen about a 6.6% pullback in the S&P. I have started, before this, I had started selling puts, and I officially got assigned on some S&P on Friday. So I'm slowly building into this pullback. I think that, here's my opinion on it, Chris, and weigh in on your own as well. I think that this pullback
Hmm.
is a pullback. This is an election year. and the economy is really strong. Of course, well, earnings are a big question mark, but it's an election year. Earnings are strong. Oil prices are not at a dangerous level to kill us in terms of inflation. They're rising, but they're not at 100. Geopolitics are of course a concern, and if it escalates much further, then yes, that is something to be concerned about. But for me, what I see is, stock market doesn't usually crash on just a strong economy. Right
Right.
now, we're seeing, the Nasdaq pulled back at one point to nearly its it tagged the start of the year level. So we erased all of the gains for the year, and have now started to see a little bit of a bounce. My opinion is I'm buying this pullback where I can, constructively, not all at once, but I'm building into it. If we get below, a 10 or 11% correction on the S&P, I'll probably go a little heavier. So what do you think? Agree, disagree?
I'm right there with you. I think that I've been short most of this decline,
Nice.
and I keep talking about a couple of things as far as where we would expect to see prices this week. Um, let's talk wave structure: 1, 2, 3, 4, 5. Typically, what we see is a 1, 2, 3 correction. So, because of earnings this week with Mag 7, it's enough to possibly keep the market stable. But I think that may be in jeopardy of one more fade to the downside. I would like to see similar. So look, I think you're spot on with starting to get ready. If
Mhm.
I'm going to get kind of positioned for a bottom, I really like the retest of the all-time high. I like the retest of the 2023 highs, and just looking at the October to all-time high swing and looking at some fibs, we're at the 23% right now. 30% is a common Gann retracement level. 38% is this really nice correlation, or this really nice alignment of previous all-time highs and a 38% fib, which in
Mm.
the stock market, in Forex, we see a lot of 5.0s and 618s and 786s and some of those deeper efficient pullbacks. In stocks, I mean, we're almost lucky to get 382 pullbacks. So
Sure.
anyway, I like getting positioned for this. So here's what I have running this week. If you can see, I don't know if I have it typed on my chart for SPX, but I have a 48. Let me look at my position here. I have a 40. I'm doing some credit options with the SPX. Let me go into an account right here. So here is an example. So I'm doing the 48.10 is my put level. So similar to what you're doing as far as like that's where I'm going to start participating, maybe take some ownership. I'm just
Yep.
that's my strike level where this rally is still very well supported to me around 48.10 to 4800. And if I'm going to get more directional, I'll probably do it more with earnings than if I'm going to own SPY as opposed to buying the SPX. Obviously, it's a crazy different price. But I
Mhm.
can trade a lot of options around the SPX. Now, this level to me is where I'd say, okay, this has the best opportunity to get back up and retest the highs. I don't
Sure.
know if the markets after this type of sell off, if we start getting like 7, 8, pushing 10% on this correction, I think it's going to be a bit harder to blow through the all time highs.
Yep.
We might, leak or just barely like breach the ceiling to those all time highs. And then the market just has an absence of sellers. But the thoughts of getting the Dow Jones up to 40,000 this year, the thoughts of the S&P going to 6,000 this year. Obviously, anything can happen, but I just feel like the market was so amped and so excited, and man, did it switch sentiment. I mean, it's fear sentiment right now, which is another reason to also be looking to buy. I mean,
Yep.
smart investors are buying when it's fearful. And I know it's
Right.
volatile, and that's the courageous time to step in and say, look, I'm going to start buying these dips and buying in these falls. But that's the best time to do it because the upside is way more rewarding.
Yeah, no, exactly right. I mean that's the time to be a buyer if you're ever going to be one. I do think, when you're looking at the S&P, and a lot of people have been trained here. A lot of I saw something on Twitter. It triggered me to no end, Chris. As somebody was pointing out that during this time they were like, all you got to do is wake up and buy the Nasdaq and you make money. It's easy. And they weren't even saying it ironically. They were like serious. They were like, my strategy has been, just so powerful recently. Buy the
Yeah.
Nasdaq in the morning and sell it in the afternoon. And I'm like,
So they've been
that
trading for like less than 3 years.
right. Their scope of what the market is this only. This is their
Right.
entire scope. This is their entire back tested history of the
Yep.
Nasdaq or the S&P.
Yep.
I think it's great. I think it's a healthy correction. I don't think that this is what probably gets me nervous, Chris. would be a 10-year, and this is what everybody's saying. I'm aware that this is the Wall Street standard.
5%. Yeah.
5%. If it gets
Yep.
above 5%, we are probably back on looking for hikes. And
Yep.
hikes would be horrendous for this market.
Correct.
For my friends in the audience who are newer to trading in indices, let me tell you that I employ, Chris knows this, a lot of my audience knows this. I'm a pretty conservative trader. I like to, be very risk adverse in what I do. I'm not taking, YOLO shots by any means, but still in the turn on 2022, when rate hikes were all over the place and we had no idea how high those things were going to go, my currency trading account looked great. I was long the dollar for most of that year. That was a wonderful, wonderful time in currency land. But for stock land for me, I had a 30% drawdown on my account, which is a big drawdown. And that was preceded with, you'll remember this, Chris, some of the greatest times for stocks that I've seen in my career. 2020 and 2021 were just, stimulus was everywhere. So just a fair warning, markets do not go straight up. And I heard it really well this weekend. If you want to play ball, if you want to be involved in stocks, be prepared for a 60% drawdown at any given time if you are invested or trading growth names, especially. Now, are you going to have a 60% guaranteed drawdown? No, I'm not saying that, but be prepared. If you're mentally not able to understand that can happen to you and nobody knows when that's going to happen in the stock market, stay out of the kitchen. You know what I mean?
Mm-hmm. Yeah, I mean, and the reality, think about the averages. The average S&P move is 8% a year.
Yeah.
And realistically, I mean, 60% for growth is completely true, because we saw that in 2020, 2022, we had, 60-70% pullbacks on some stocks. 2020, we had some 60-70% pullbacks in stocks, 90% pullbacks in stocks. But if you think about the indexes, if let's just give the S&P credit, with dividends and everything, you're going to get about an 8.5 to 10% return, roughly. You're going to expect anywhere between a 25 and 30% drawdown in order to achieve that 10% profit.
Yes.
So it's, I mean, and that's kind of the backward symmetry of trading equities, is you're taking a 2-to-1 or 3-to-1 risk in order to produce consistent reward. And yes, if you look at the 50-60 year history, it's like a 54% bias of the market going up more than it goes down. So yes, it makes sense. Like, if you focus on buying, you're probably going to be better off than most investors. The problem is, if all we're conditioned to do is see up and buy up and buy up and buy all-time highs, at some point when the market does turn like this, it catches traders off guard, and all of a sudden they're aggressively long and over leveraged, and then they're down a ridiculous amount. I mean, I'm nursing a drawdown right now on my Russell. It's one of my bigger drawdowns, but I mean, comparing my Russell to, so I've got the IWM is how I'm trading the Russell. So my IWM drawdown. Let me go to all my accounts here. So let's go IWM, and it's right here. So it's down about 15K, which is around 2%, roughly, give or take. My silver trade is up around 13K. So, I mean, and by the way, this isn't like, oh, I'm upside down 2% and this expires, this week. It's like, I'm out to January. So the one thing I'm also considering is, if the market's selling off right now, this is the market's way of possibly pricing in all the bad. And I don't say all the bad, but it's like most of it. I mean, we have the Fed is shifting the expectations to rate cuts again. I don't think hikes are necessarily on the table, just because it's so costly for the Fed to have to hike rates.
Yep.
But if they did, it's like, if they do this in an election year, the market is going to suck during an election year, which historically is not how it plays out. So I don't think the Fed is going to do, on their part, they don't want to be the blame, they don't want the blame game for why the market crashed during 2024. So I think the Fed will probably just pause and take it on the chin. Whether the market, yields go up to 5% on the 10-year, we'll find out. But I think it's a pause through the summer months. We see what happens this fall. But all the bad stuff with geopolitical tensions and Middle East escalations, that's what, I mean, we don't know, but I mean, do you remember in 2021 when we had like North Korea threatening nukes every couple of weeks? When or not, was it 2021? Maybe it was 2018, 19. I don't know, man. I mean, it's all a blur at sometimes. But we've had the threat of war, escalations. We have a war. We have Russia, Ukraine, that have been battling for over 2 years, and the markets are making all-time highs. So it's like, I don't think that just a little bit of tension is going to ruin or derail the markets at this time. But market's trying to price it in. That's all.
Yep. No, and I think that that's where, this conversation comes up every time there is a correction or a pullback or something like that, as people start, immediately thinking of the worst. And I think
Yeah.
that's human nature. You're looking for
Yep.
the, seek and destroy the problem, whatever it is. And, I think that there's something to be said about a willingness to step in and buy, a 5% correction, a 7% correction. And if I'm wrong in doing that, accepting the consequences
For sure.
and
Yeah.
looking for 15% or 10%. Chris, here's one of my higher risk things that I did, and not politically correct in trading land. I sold puts on the semiconductor ETF
Hmm.
because here's my opinion. If the market rebounds this year, I don't think you can have the market really charge up higher. Some people would say, sector rotation, other areas are going to lead the charge. But if you're talking about staying on the course to rate cuts at some point, that's what the market needs to not sell off more. We need reassurance from PCE. We need, earnings season to come in strong. You need those things. And in my opinion, the leaders who got us here will probably continue to lead if we see a strong bounce. If we're going to
Yeah.
get back to the all-time highs, my opinion is you need big tech and semis to still be strong. And I think that we're going off of this assumption that, it's an election year and the Fed doesn't want to look terrible. I think, this is not a guarantee, but the risk reward here looks pretty good in my opinion. If I get assigned on these, that's an 18% pullback on the semiconductor
Hmm.
ETF. I'll start a position there. And if
Sure.
I get smoked and I hold on to it for 5 years, then I'll sell some covered calls and build a position lower. That's kind of my approach on semis here.
Yeah, and to that point, I mean, let me just grab a fib from, let's go October, November low
Yep.
into the highs. I mean, you've already had that 38% level. That is a very solid spot where if and for you too, if you're taking assignment, what was your price, like 195, Nick? Is that what I saw?
195. Yep.
195. Okay. So if you take assignment at 195, I mean, the nice thing about a volatile play, are you taking assignment in SMH? You're actually owning the ETF?
Yep. And my expiration date is 4/26, so just a couple
I saw
days
that.
out. I would love
Yeah.
to get
So
a
that's
time,
this
to be
Friday.
honest.
Yeah, and the nice thing is, let's say you take assignment. Well, whatever that is, I mean, you've got 20% to retest the all-time highs.
Mhm.
And the nice thing is on SMH, let's see what like a slightly out of the money call option would trade for. If you wanted to actually be a little bit more active to lower your cost basis, you take
Mhm.
assignment at 195. This is what's kind of nice. If you went out, let's say you get assigned, let's say it dips below 195, you take the assignment. If you went out for like a 30-day window and
Yep.
just sold, and again, you're doing this to not get the stock called away, but
Right.
rather lower
Just
your
collect
cost
something.
basis. And that way, if the market is a little bit more volatile to the downside, you're still making money. So your assignment price is 195. If you went out 30 days, roughly, I mean, and at the money, I mean, Nick, you can lower your cost basis by $8 to $9 over like a
Right.
30-day period. So I mean,
Right.
you would have no problem bringing a 195 down to a 190, 185, 180, and not really have to. I mean, if I want to go out of the money like a 15 delta, you're still making a couple of bucks every 30 days. So
Yeah.
again, point is, it's
Just
a
the
great
advantage of
trade.
a
Yeah,
high implied volatility, ETF like this.
yep,
Of course, the disadvantage is the drawdowns can be significant,
for sure.
but it's a portion of my account. I'm not going
Yep,
all in on my account, and I think that
yep,
if you accept some higher risk areas of the market, undoubtedly like semis, you're making a great point for collecting premium on those names. For another example, if you really like Tesla stock, the
hmm,
premiums on that thing are insane. If you are, I mean, especially right now ahead of earnings,
yep.
if you don't mind owning the shares, this is what I wanted to get to you on Tesla
Okay.
is, let's just say, you know, Tesla is an interesting one too. A lot of people have abandoned the bull case on Tesla. They've
Yeah.
completely said Tesla, they've written it off. And Chris, I made some of my biggest trade ever was on Tesla. I bought Tesla after the breakout to the downside in 2020. That was my biggest trade for me personally ever,
Okay.
was I bought the dip and rode it. Now I rode it too long. I rode it past stimulus land, which I shouldn't have, obviously hindsight, but the stimulus land that we saw in 2020, 2021 was magical for companies like Tesla and Spotify, and all the ones that you pointed out in 2022 looked horrible.
Mhm.
And then I sold out of it at a point. But I'm looking at it again with some fresh eyes. I think the Wall Street story is gone. I think Elon Musk is not a dummy. Everybody's kind of written him up as he's just a dummy now, or at least a lot of people just roll their eyes at him. And while I don't love that I have to call X X, I still think that he's a brilliant genius, a brilliant
Yeah.
businessman. He's looking
Yeah.
at his rival, Musk, or Musk is looking at Zuck, and he's like, hey, all these other guys are killing it, and they're innovating, and I feel like I just a hunch. I think he's gonna be competitive about that and have some stuff to dazzle investors in August when they do Tesla Day.
Yeah, I don't doubt that. I think what investors possibly need to see on a stock like Tesla is they need to see that there's some pivot away from just purely a car company into
Yes.
way more tech. And so maybe that's what the dazzling is the shiny object is something
Yeah.
in the tech space and autonomous vehicle space. And maybe they're the first to market when it comes to something sell. I don't know. I don't know. But I do think that it's coming down to levels where I've taken some small credit spread losses on Tesla over the last 30 to 45 days. I'm still looking at doing some out of the money credit spreads. I'm way more interested, and this is where I would be a little bit more of like my line in the sand here. I dig my
Mhm.
heels in around this $100 level. So
Yep.
with earnings this week on Tesla, if we somehow, let's say we miss earnings, which maybe the market's already anticipating, that's just been so beat up. But if
Mhm.
we miss earnings and leave a big fat gap, I'm buying that gap, dude. I think it's I
Yeah.
think it's a good solid play. At least some options exposure, maybe a 30 to 40 to 60-day window. And honestly, if it comes down to $100, I'm way more long term. I would be happy to buy leaps on Tesla and go out 12 months and see if this company can get back on track. Maybe all time highs are a long ways away, but if I can get $190 call option that gets back to $200 to $300 by the end of the year, that's a lot of return on a position
Yeah.
that wouldn't cost a lot of money.
Well, I think if you just kind of think about the concept of Tesla for a second, yes, the debate is this a car company or is this a tech company? And the
Yep.
valuations are vastly different in those
Yep.
two stories. If you're a car company, look at GM and
Margins are
Ford. The
thin. Yeah.
it's not
Yeah.
very
Nothing happens.
attractive.
Yep.
But if you're talking about you know, the race to electric vehicles, is EV the future? I think that there's an argument to be made that it is. A lot of stuff seems to be in that direction. It seems to be the most clean energy potential, like realistic, future of cars.
Mhm.
There's a risk there because it could be not the case. My dad has a natural gas car, and we back when I was a kid, we thought like, oh, that's going to become a thing because it's so much more affordable. Natural gas is so much more cheap to fill up your tank. He gets great mileage on that thing, but
Mhm.
it's more about the infrastructure and the mass adoption of something for it to really stick. And is that going to be the future? We'll see. I mean, if you look at other names, Neo and the Lucid, the Saudi company that
Yep.
does cars, the EV world is under fire. But if you think it's in the future, I think it's a decent time to look at some of these names. And if it is in the future, my round coming back to the initial point is that Tesla, in my opinion, is positioned to be the leader in that, right? It already is, but if it's a big American company, if globally, if it becomes a bigger adoption, um, the US is going to, of course, back the the leader. It typically does that, right? Whether it be
Sure.
Nvidia with government contracts, typically is the story. So I kind of agree with you. I'm hesitant to touch it, and if I do touch it, it'll be a small position. But I like that 100 range as well for maybe watching it close and maybe a turnaround story at some point.
Yeah, and also just the shakeup in the automotive industry. I think that's what Tesla was, is a huge disruptor. And even now, when they're cutting costs on their cars, it's a disruptor. It's going to weigh on the margins of a GM and a Toyota and a Ford. The companies you'd mentioned. If you look at a Rivian or Fisker Or,
Mhm.
it wasn't that long ago, you had Workhorse and Lordstown Motors or Ride and all these other, like all of them, like they're gonna disrupt the auto industry. It's gonna be get to market before the big three or the big automakers.
Yep.
They're trash now. I mean, it's
Yeah.
95, 99% drawdowns. I don't want to touch these at all. I got burned on these because they were SPACs, and I mean burned in the sense of like, all right, I'll take a $500 risk or $1,000 risk, and it's a loss. At this
Yeah,
point, it's
right.
like I don't want to sit and waste that. To me, that's dead capital, hoping and praying for something that's probably
Yeah,
never going to happen. And if you're lucky, these are going to be it's going to be concentration, just like a
right.
lot of things in the market. Like look at the power of an Amazon or a Meta or a Google. What do they do with all their competitors? They buy them,
Yes.
right? And so, I mean, these little automakers, the EV, the future of EV, or these startups will be absorbed, I think, at some point, if they even survive, or they're
Yeah.
just they're fire sales because
I mean,
you're
I'm
going to have
I'm
a
surprised
Tesla.
Rivian hasn't been bought by Amazon already.
I
Like, why
well,
hasn't that happened?
I can't believe you can build a car and lose $40,000 per vehicle, and you're still in business.
Yeah,
And
just
I mean,
crazy.
they're all over the road, and it's like I mean, they look nice, I guess. It's like
Yeah,
I just can't believe it's $120,000, 100 and whatever SUV or truck, and it's
yeah,
like, and that company lost money on that sale, and it's so expensive.
yep.
It's
So
crazy,
here's a
man.
question, Chris, for you. I'm
Yeah.
gonna ask you this question. Last thing before I give you the show for a little bit.
Sure.
There's been a pattern here on
Okay.
intraday charts for the Nasdaq, for the S&P, for all the indices. Pop in the morning,
Yep.
drop the rest of the day.
Yep.
Um, exactly opposite from what it used to be, which was we would see these little blips in the morning on like a CPI or an NFP, and the market would say, "Don't care, going higher."
Correct.
Now it seems like we kick off, we get the jump start, but the engine stalls and we roll over. Um, what are your thoughts on that? Do you think that is here to stay for a little bit, or do you think we potentially bottom out in earnings season here or this week?
Like I said, I think this week, because we finally have a big earnings week. I think
Mhm.
this earnings week, and I know we have PC on Friday, but that
Yep.
gives us hundreds of companies to print earnings. That gives us Mag 7 to print earnings, and PC can come in as expected, which is what I think the market would kind of love to see for a little stability this week.
Hmm.
I don't think that an up move. Let's say that this week. So let's go to the weekly chart on SPX. I don't think an up move this week necessarily guarantees the bottom is in,
Sure.
because we've only had a couple weeks that have actually sold off, and it took us, 4 weeks of some ranging, and I had this drawn right. We had this like ceiling and floor, and then sure enough, the floor breaks, and we have a solid week of selling right below that. So I think this week would be, if earnings are solid from the biggest companies in the world, market likes that enough to stabilize. But then there's more earnings coming. If the forward guidance is not all that optimistic,
Yep.
then that's where we have another flush lower. But like you said, I'm right there with you. If we test some really solid technical levels, I'm interested in buying into that correction, because if we get an 8, 9, 10% correction in the broader market, I think even if we just check this and we go sideways, that's still, a 9 to 10% area where there's a lot of money to be made. If we time this a little bit better on some range bound trading, yeah, all-time highs would be great. But if I just time this better, I can still make pretty good profits over a 2 to 4 week window of having a directional play. So right now I'm looking at prices today. I'm trying to get a 0 DT trade on for the SPX. I've got it above right now. I'm looking to fade. I'm just still looking to fade for right now, but
Yep.
I do have. I mentioned this before. I have some trades on the SPX 4810. So as long as price stays above 4810, collect full profit. If price falls into 4810, I've got a Friday expiration where I can turn that into like a 10x return. If I go into the NDX, that is the NASDAQ, did the same thing here. The NASDAQ is a 16,600. Same type of thing. It's right around that 382. It's right around previous all-time highs. We
Mhm.
had such a huge drop last week on the NASDAQ. I'm like, well, of course we could do that again, and my position would be threatened. But with the major tech this week, if it just stabilizes and pushes back up here, I'll get full credit on that. I can do it again for the next couple weeks, and I think I can ride out some option trades over the next couple weeks. And then if we do come into the technical levels that I want, I'll position more bullish and have that bias.
Yep. Well, very cool, Chris. I'm going to let you take over the stream here for a little bit. Before I do that, let me just also let everybody know who's listening. Chris has his own YouTube channel. He has a Discord channel. Highly recommend if you guys are looking for some more free value to add to your trading journey, trading career, whatever. We're going to drop some links here in the chat, and stick around with Chris. He's going to go through some more ideas, stuff, and just take over the show for a little bit. So, Chris, you got the floor, man. We'll see you next time.
All right, thanks, Nick. Good to see you,
See ya.
man. Bye. All right, everybody. Let's pick up where we left off. So, again, I mean, what to watch this week? I saw some questions on gold and silver and the dollar. We'll certainly take a look at those. I am watching the indexes really closely. Here are the earnings prints again. That was last week's performance. Notables for me. So trades that I'll probably take in my trading rooms this week. I will be looking to price out earnings on Spotify, Tesla, Boeing. Depends on the volatility. I'll probably scratch that one now that I see it. I mean, I'd be interested if it's low enough. I'd take a stab at Boeing, but probably just on a straight up earnings play. Tesla's going to be one that I'll consider just for straight up earnings play, and also where it is to maybe look at some bullish positioning. Meta had blowout earnings from Q4. I don't think that they want to really show any signs of stopping. They're certainly pivoting hard into this AI space, and they've come back in a big way as far as just price. I mean, Meta's been one of the biggest recoveries. Where this year, I mean, Meta and Nvidia were two of the best performing stocks in carrying the broader market, and Meta's huge, obviously. So anyway, that's one I'll look to play for volatility. Google, Microsoft, not nearly as volatile, but certainly ones to watch where if they both print positive, okay, if they print positive as well as Meta, for example, if they're beating earnings top and bottom from EPS as well as revenue, I think that's the stability that I talked about this week where the market maybe trickles higher, but it doesn't take out all-time highs. I don't think we're coming up to all-time highs anytime soon. It's still going to be kind of digesting this uncertainty and what the Fed's going to do, and we probably have to get into May for maybe more clarity on the Fed. But I will look at possibly 2 to maybe these energy companies here, maybe 2 to 5. I'll say 2 to 5 earnings plays this week, and they'll be pretty straightforward. I want to price them out where if I did, let's say prices at the money, and I trade something where if it goes up or it goes down, not just a long straddle necessarily. Sometimes they do long strangles. Sometimes they do reverse iron condors where I like to see that, yeah, I can cap my move, but I make my debit a little bit cheaper. So for example, if I'm looking at, Meta can make like a $50 move, I could buy a call and then sell $50 higher. I could buy a put and I could sell $50 lower. And so even if we go through those levels, I can still price it out where maybe I pay like $15 for the option, but I can still max out at $50, give me a net, $30 to $35 credit, which is a good trade, obviously. And if the market blows through my earnings, that's okay. I cap my upside, but I at least know what my profit is, and I can hopefully turn that into like a 1-to-1 or 1.5 to 1, slightly bigger. And it's hard in earnings to get, more reward than risk unless you don't cap the upside, which means you're paying more for those premiums. So if this is la la land for talking options here, I'm just saying that there's going to be some good volatility this week. This is one of the bigger earnings. I mean, typically when we see a week that has, 500 companies, 700 companies, 1,000 companies, the market tends to, digest that, meaning that can be a mover in and of itself. So it's not about major news this week. I know PCE's on Friday. We have PMI numbers kind of coming out tomorrow on the calendar. But for the most part, I mean, I think the U.S. equities market's going to be focused on earnings this week in particular. Okay. So that calendar, that's on StockTwits there, Iggy. So if you subscribe to StockTwits, they send, Morning Brew is a good newsletter. StockTwits is pretty solid for some daily recaps, and they'll send out, some weekly reports on what to expect for the upcoming weeks. Let's see here. Let's go dollar index. I saw dollar index questions. I saw gold and silver. Russ is talking about BOJ. Project inflation will stay around target. Signal chance for rate hike. I doubt it. I know that the BOJ is this week. I don't think they're changing policy, man. I really don't. And I say that because of the timeline and the seasonality of the carry trade. I mean, I've seen carry trades. I mean, I've been trading currency since 2007, 2008. The carry trade was alive and well right into the financial crisis. The GFC as it's considered now, like the Great Financial Crisis. So 2007, 2008, that was right when I started trading currencies. Once we started a bottom in 2009, 2010, 11, 12 was the carry trade in the Japanese yen. I mean, if you look at historical charts, the dollar yen was trading, 80, and the carry trade in the big move was we're going to 100, and that was a 2,000 point move on the dollar yen. It took years to unravel that because the dollar went from 80 to 120. We had a 4,000 pip move, and then 120 back to 100, then 100. Now we are talking, dollar yen up to 150. Point is, positive swap is across the board. Dollar yen's been one of the easier trades to watch, go to the upside. We broke that 152 level. I will say this. Let's say the Bank of Japan hikes rates to what? 0.2%? I mean, they went from negative 0.1 to 0, right? And I know they're like in a window between 0% and 0.10%. What are they going to hike to? Are they going to shock the market and just completely unravel overnight? Probably not, right? I mean, economically, the Nikkei is at all-time highs or was at all-time highs. It's pulled back recently, but I think that you have a lot of incentive for a country, an economy, to keep their indexes and their investment vehicles going higher for longer. I mean, the Nikkei, after the first time in 30 plus years reaching all-time highs again, I'm pretty sure that the Japanese monetary policy does not want to unravel this. So, this started in 2023. We're only to a quarter into 2024. We have a U.S. election year. I just think there's more stability and resiliency in this stuff than traders are giving it credit for. So my point is, and again, it's all my opinion. You can take it or leave it, but I think that the carry trade is not going away. Now, I will say this: when can I switch my mind? When can I change my outlook? Like I said earlier, the yen is not a currency pair that I like to guess when the top is in. You know, so to me, if this yen is going to unravel and this carry trade is going to erode, then we're talking about the dollar yen creating some type of pattern at the top and then watching this thing fall. So what does that top look like? Possibly head and shoulders, possibly a crown, possibly a cup and handle, possibly a rising wedge. Could be a lot of things, right? And it could be something like this. Well, we have the high, the market broke those highs. Well, what if the yen does this? Keeps making highs, keeps making highs, keeps making highs, and it just makes this huge rising wedge. I still will not guess where the top is because the easiest trade is sell stop, sell stop, sell stop, sell stop, sell stop, and watch this thing crumble all the way back down to that level there. And you can have thousands and thousands of pips over, a year or two when it's time and when it's confirming. But man, one of the hardest things to do right now is, and here's a good example. Look at the dollar yen, or look at some of the other yen crosses last week. Oops. Look at the Aussie yen, CAD yen, Euro yen, all of them last week. Let's go to a daily chart. It's a little bit easier to see. Look at this candle right here. Okay. We had risk off and the market sold off. I mean, that's a big candle. That was like a 100+ pip candle for the day. I think it was more than that actually. I mean, on the day, 150 pips. The pound yen had a 200+ pip candle, but the market on the same day that it sold off for risk off trading, it was right back where it started, and here we are making higher highs. So again, I just think that the carry trade it's here to stay for a little bit longer. When I say a little bit longer, I think we get through this year. I think if we're going to see an unraveling, it's probably sometime in 2025. There's good technicals to watch. There's good technicals to be mindful of, but the Aussie yen's a good example. Where would this be breaking structure? On the right-hand side of this trend line. Then we can start talking about selling. But until then, this is carry trade, carry trade, carry trade. It's not going to be easy trading, but I've told traders in my flex room, if you're focused on buying against the yen, you're probably going to have better opportunities right now to have low risk, higher reward as a currency trader. Because we're not talking about, I need to take the Aussie yen up to, 105. No, I'm talking about, buying a dip on a, 1 hour time frame, 15-minute time frame, getting it at a decent low, and then having a 150 to 200 pip upside. So you can take a trade that risks less than 50 pips and grab maybe 1.5 to 2 times your risk. But you could do that probably, 10 to 20 to 30 times versus the one big unraveling that we're all kind of waiting for. So I just don't think the carry trade is going to unravel. Still holding below 155. I think once it breaks, no intervention, intervene at 160. Sure, but you're talking about a totally different scenario. Now you're talking intervention. Okay, They had to intervene 3 times in 2022 and 2023 to have the correction, right? You look at dollar yen, those interventions, it happened 3 times. And to the luck of every forex trader that was short the yen, like short dollar yen, when they started those interventions, traders are freaking lucky that this intervention did not come at a time with a flash crash to the upside, because that's typically what the intervention looks like, is flash crash and then the BOJ or the whatever that central bank or that backstop would be. It's like, okay, now we'll step in. Traders are lucky that they had at least a cooperative intervention. So yes, we had intervention in here, we had intervention in here, we had intervention in there. 3 occasions over like a 3 or 4 month window that we finally had the correction. So yeah, sure, if 160 is a level, 160 is a level, but does it have to be 160? What makes 160 so powerful? Nothing. In my opinion, nothing. What makes it have to stop at 160? Okay, there's a high from 1990. But what about all this? What about this previous high from 1981? If we break 160, what's to stop us from going to 180 or 200? I don't know. Maybe nothing. And the reality is this: what if this is just nothing more than a massive head and shoulders pattern? And this is wave 1, this is wave 2, and we're still trying to figure out wave 3. If this is wave 4, we're in the middle of a wave 5. Just saying. You look at the bigger time frames, there's no reason for the market to stop. So if it's a carry trade, BOJ just goes, we're not changing rates. We're not unraveling the carry trade. This is why I don't want to fight it. I just think, look, the Japanese yen is one of the dumbest currency pairs to fight. I can promise you. If you did it in 2008, you fought it, you probably got crushed. If you did it in 2012 and 13 and 14, you probably got crushed. If you did it in 2020, 2021, you probably got crushed. If you did it in 2022, you probably got crushed. It just keeps doing this. Like, it takes no prisoners. Trade what you see. Trade small. Then you'll survive the yen. You maybe make some money. But I personally make a lot more money by not spending a bunch of time on the yen, because look, the Forex market is too technically obedient and the Japanese yen is not, right? So it is obedient when it comes to trade what you see. But when it comes to overbought conditions, oversold conditions, extremes and patterns and highs and lows and intervention manipulation, that throws out some of the technicals, right? And that's what makes trading Forex beautiful, is trade the technicals. And when it doesn't happen in a currency like the Japanese yen, you're like, what am I doing? Why am I trading, my RSI when it's crazy overbought, or I'm trading, waiting for a stochastic U-turn, or whether I'm looking for divergence? Doesn't freaking matter, So I'm just saying, be careful, right? But good technicals and good alignments, and you trade what you see. It's just like anything else. Wait for confirmation. So, and I've had that little catchy saying. It's been easy to remember, right? Trade confirmation, not anticipation, especially when it comes to the Japanese yen. Okay, FTSE. Let's see what we're doing on FTSE. I mean, the broader market. I mean, if we're about to see some rate cuts coming out of Europe, and I don't know if that's the case. I mean, we have the ECB. I think I looked at this last week in my trading rooms. We have some rate cuts that are probably expected. Let's go cbrates.com really quickly. Let's talk about where these are at. So Australia still's at, I'll talk majors right now. So Australia's still at 4.35. Canada still at 5%. ECB still at 4.25%, I believe, 4.5%. UK at 5.25. New Zealand at 5.5. Yen is still at 0 to 0.10. The dollar, or the US, the Fed, is at 5.25 to 5.5. If I'm going to see banks cut prior to the Fed in 2024, the banks I could see doing it would be the ECB and the Bank of Canada. Probably the 2 banks I would see cutting before others. So again, and we've talked about this in the streams with Nick and the team. We've talked about the dollar being the cleanest dirty shirt in the laundry, because if you look at the technicals and we're in the middle of this pre-summer push, I think the dollar has more room to rally. And what's finally correlating as of the last couple of weeks is risk off in the stock market has still translated into risk off trading in the currencies, which means dollar strength. So to start this year off, we saw dollar strength and we saw stock market strength, right? Stock market finally rolled over, dollar's been strong. So at the end of the day, it still was risk off tones in the currency market, but equities is trying to outperform because of inflation. Gold and silver's have had a decent run. I mean, gold's had a great run out of the gates. Oil's had a great run out of the gates, but all that's being checked right now. So we're going to see over the next, 2 to 4 weeks where these winners that emerge early in the year, whether or not they have what it takes to still do it again. Are we still going to ride all-time highs this year on tech and semiconductors and AI? Or will there be a switch and rotation into more defensive plays, into value? And I'll say this, if we do see some rotation into energy and inflation plays and value, that doesn't bode well for maybe 2025, because that's what happened, 2008, 9, 10, the big rips in value that were up like triple digit gains. Like we're talking, 1, 2, 3, 500% runs on some of those value stocks that are just the dirt cheap, low PE stocks. Those runs are ridiculous, but man, you have to wait. But if it's time to get those things to pop, man, they could outperform by a lot. So I am very curious to see if we have a big rotation into value and rotation into defense and rotation into lower beta. But again, how disruptive will geopolitical tensions be to the markets this year? How disruptive will earnings be or the Fed be in the next couple of months? I don't know, right? If I had a crystal ball, if all of us here had a crystal ball, we'd tell you what we'd see. It's like that's why we share this stuff. But what we can do is we can pick and choose when we trade. We can pick and choose how much we risk, and we just keep trading. At the end of the day, it's not a one. One trade does not define you. Win or lose should not define you as a trader. I'm not the trader that's going to have one trade that doubled and tripled my account. That's ridiculous, because that one trade could also be the reason I lose everything. So, and I'm not the trader that's going out on oil at $200 and buying a penny call option. It'd be great if it happens, but the probability is if I put $1,000 on a penny call option, I know my probability is 99% that I'm not going to win. So I'd rather trade my 70, 80, 90% probability of profit and do that over and over again and just continue to make money you know so right now I think that the dollar continues to stay bid. Right now we're in, it's April 22nd through the 26th. We'll get through April. We have through May. A lot of these currency trends as well through the pre-summer pushes will last into the end of May, into the first part of June. If we look at the if you consider the Fed decision, okay, the Fed decision is going to be May 1st. So let's go to the watch tool really quickly. And May 1st is the next Fed rate decision. Nothing is supposed to happen for May. We do have the other central banks that will be in May as well. I think actually we talked about this last week in my trading room. A lot of the central banks like the Eurozone and I think the Bank of Canada. Bank of Canada might be in May, but I'm pretty sure the ECB, the Swiss National Bank, are all in June. And June 12th was supposed to be the rate cut for the Fed. Now it's an 83% probability that nothing happens. It's going to be a pause. The first chance of a cut, according to this watch tool, is now September, and that's a 25 basis points cut. I do think this is going to change, and this is going to be flipping around. And this goes, this histogram goes higher, lower over the coming months based on what Powell says on the first, based on what data comes in this week with PCE, based on another round of inflation data, in May. We'll find out. So, like I said, pick your battles, trade accordingly. Risk reward, all that stuff is important. What I like this week, currency wise, I think the dollar gets a little bit stronger. We could see some pullbacks on if the equities market goes up, I could see the dollar taking a bit of a pullback, but levels I would watch would be right here. We pull back to this 105, 105.50 zone. We pull back to this previous level. To me, that's where I'm looking for dollar strength to still be bid, right? I don't think the dollar just keeps ripping to the upside, but I can see the dollar catching some bid around 105.50 to possibly that previous breakout point, which is right around the 105. So 105.50 to 105, good support looking to me on the dollar. And then on the stock market, if we fall a little bit lower, we could be in, look, we could fall early in the week and be saved by Mag 7. So, I mean, look at this is the SPY. So, I mean, falling into the 30% zone, falling into the 382 zone, that's still a heck of a sell-off if I'm honest. I mean, if we fall another, I've got profit that'll be sitting here on the SPX, which I think is a high probability. But if we dropped another 3.5%, 3.7%, that's a big, big sell-off for the week. And if we did that over the course of the correction, Now we're talking about 8 to 9% corrections from all-time highs. That's a stiff correction. You know, when we have aggressive bull markets like we saw here, we had less than 2% dips. All these little pullbacks, all these little red hesitations are all less than 2%. We finally started to pause. We put in the floor, we put in the ceiling, floor broke. Here we are another, 3 to 4% lower. So I am liking this area to buy, right? I want to buy roughly this 3.0 and 3.82. That's where I'm looking to be positioned. I think that for me, if I'm getting long in this area, I'm looking for some directional plays over maybe a 30 to 60 to 90-day cycle. And if I'm right on that, great. If I need to go out a little bit longer, I'm not going to hesitate to do, even if I buy the time, I still get intrinsic value in my option plays. So if I, buy an option that's dated out to 2025, okay, it's more expensive up front, but I still get the move in the option that, okay, so instead of making hundreds of percents, like, okay, maybe I make 30, 40, 50% on an option contract that the overall index only goes up, 10, 11%, and I could turn an option contract into 30, 40, 50%. I'll take that risk, you know. So anyway, those are the technicals I'm looking at on the major indexes. Aussie dollar, Jackie. I mean, if I'm looking at dollar index being stronger, I would expect Aussie dollar continue to fall lower. So Aussie dollar looking to fall lower, Euro dollar continue to fall lower. Here's where I would watch. I mean, look, we're getting some indecision right here. I'm not bullish on the Aussie dollar until it takes out this high. So because we broke this low, I mean, to me, this is a big range opportunity on the Aussie dollar. I could see the Aussie dollar doing this. We break the floor. If we're back above 6,500, perhaps that's putting in a near-term bottom, perhaps. But if we do not break 6,500, okay, let's say that we stay sideways here. If we break up here, hit resistance, and then sell back off, that's where I'm looking for dollar strength. So I will say this. I would say my dollar strength is invalidated against the Aussie if the Aussie closes back up here around 65.50. Okay. If it's back up here above 6,500, above 65.50, then I'd say, yeah, we look at a, bull flag and see if the market wants to come back and retest range levels. But then the DXY is going to be not what I plan. It'd be below 105.50, it'd be below 105, and it'd be busting up those support levels that I'm looking for. So I think euro dollar slides a little bit lower. I think Aussie dollar slides a little bit lower. Pound dollar has been sliding lower after a bunch of noise. The dollar CAD has been sliding higher, pushing higher towards the 139. We had a decent pullback on that last week. But as this rips, I don't think that the dollar CAD is the top. I hope it's not, because it's like, again, this would be a very slippery pair if all of a sudden we're putting in a top around 38.45, as opposed to what we've seen, recent 2-year, 3-year highs at 140, 139 to 140. So I think there's another opportunity to maybe get some pullbacks, buy some dips on the dollar CAD, get up to fresh highs again at 39, 139.50, and push into that dollar strength that I'm talking about. Okay. All right. Dollar yen. We did dollar yen. I'm just buying dips on dollar yen. That's it. I've got robots running, dollar yen long. I talked about this last week in a couple of classes that I did. Let me see if I have the deployments on here. So these are what I currently have some robots trading. So Aussie, Swiss, CAD, Swiss, Euro, Swiss, Pound, Swiss, New Zealand, Swiss, Dollar, Swiss. I'm buying only on some robots. Aussie yen, CAD yen, Euro yen, Pound yen, New Zealand yen, Dollar yen. I'm only buying. So my robots are taking those pullbacks and taking those dips, buying small risk, go after 1-to-1, 1.5 to 1, 2-to-1 reward to risk, take a chunk of profits on pullbacks. That's what my robots do best. So I'm actually positioning some automation for carry trade. So if I'm holding positions, I'm getting paid to hold those positions. If I'm holding positions with this carry trade, the market's going to try to eke out higher highs. These all get paid. I'm a little bit more directionally neutral on the dollar, but I think right now, my robots are in positions where I'm long the dollar in general. So I'm short Aussie dollar, I'm short euro dollar, I'm short pound dollar, short New Zealand dollar, long dollar CAD. My robots are in that direction. So we talked about those last week in some trading room sessions. Okay. All right. Yeah, I saw somebody messaged that to me. I think it was in my Discord group. Somebody mentions about the Golden Week holidays with Japan. I mean, I see it every year, but I again, it's not going to break any structure to me. I mean, the dollar yen is, if anything, it just keeps going higher. So if I'm gonna change my tone on the dollar yen, we're talking about the dollar yen all the way back down here to 146. There is nothing about this trade right now that I'm thinking I need to start selling this. Not yet. Okay. There's a trend line that why would you fight that trend line? Right? Now, if we start to go sideways again, let's say we go sideways again. Okay. If we go sideways again and then we break this trend line, easy trade. I can sell it. I can stop out there. If I'm right, we go to the outer trend line. If I'm right, we go even further. But if this is a, test and then the thing rips back up to highs, this is what it's been doing. Look at this. Sideways, break up, right? Sideways, break up. Sideways, break up. They're false breakouts. You're not getting sustained Japanese yen strength. Okay? So that's why I'm favoring the carry trade. I don't think that unravels yet. So I should get swap profits. For most brokers out there that offer swaps and financing, yes. If you're trading, a mini lot, you're going to get a couple bucks a day, roughly. It's better than getting charged. I had about 6% of my bottom line was paid in freaking financing in 2022. It was absolutely brutal. And then 2023 was a different story. Positive swap, started a position, had some nice profits. 2024, my Swiss pairs are taking off even further. So, Forex trading is looking great this year. But I'm really favoring the carry trade. So, all right, for my time, I'm gonna call it there. Thanks for letting me be on the show today, everyone at A1 Trading. I appreciate it. Everyone watching, thanks for being here. Obviously, like and subscribe, all that good stuff. If you want to follow me out there, easy to find me. My YouTube channel is youtube.com/Chris Pulver Trading. I will post. They've got the subscription in there for my YouTube channel, so I'd love to have some new followers come on in. And then for my Discord, I'll post a link right here. Just give me 5 to 10 seconds. Make sure the link doesn't expire. You can join me live. It's the best place. So if I post a link right here, just click on it if you want to join the Discord. And this is my Discord community. So Discord channel. There you go. So if you pop on in, I've got a bunch of stuff in my Discord from free chat or the free group chat for the community. Anytime I'm live on YouTube, you can join the link. I blog every Friday with what we did for the week. Anything I post on Twitter, any analysis, any charts, any earnings, any economic calendar. I also have links to education, promos for A1 Trading when the team passes them on to me with some promo codes that I use for helping out with the team. Some other stuff that I use with my option software. Trading rooms, robots, all this other stuff. I've got links to that. I do private instruction as well. I mostly reserve those for evenings and weekends, but happy to schedule that with anybody. So all that good stuff. So again, if you come in and join the Discord channel, check it out, see what's on the text channels, and I appreciate everyone being there. A1 Trading, thanks for having me on, and let's have a good week, everybody. All right, take care. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edge Finder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.